dragging down the indexes. Okay, well, McDonald's, the world's largest restaurant company, reported $1.2 billion in profit for the second quarter this morning, beating analyst estimates by 8 cents a share. But the shares, interestingly enough, are lower this morning. Let's turn to John Fisher, portfolio manager at Fifth Third Asset Management. His portfolio includes McDonald's shares. John, thanks for being on this program.
Good morning.
Very curious move in McDonald's shares. They're actually down. A pretty good report coming out from the food chain company. Why is that? Why do you think this is?
Well, without seeing the market right now, I would imagine, given the Costco news, there's a lot of concern about the consumer. And I would imagine most, if not all, retailers in restaurants are off on just general concerns about the economy, slower spending by consumers, and overall cost inflations.
But that's nothing new. I mean, and in fact, McDonald's, that stock has been doing quite well.
Well, I don't know. You can probably ask Costco shareholders about how new that is. So.
Well, that may be true. But what I'm saying is that what you're seeing is, McDonald's, that stock has actually done pretty well because a lot of people thought that there'd be this trade down, right? I mean, people who would go to the higher priced restaurants are now trading down to eating at McDonald's.
Well,
it actually benefit from that.
Well, I'm just talking about the initial reaction here this morning. There's no question that they had a strong quarter. The conference calls later today, and I think over the course of the day and over the course of the rest of the year, people are going to differentiate traffic trends and consumer spending habits of McDonald's customers versus retailers. So, that's just the initial reaction to the earnings. I think it's a category or a sector thing, not a McDonald's specific thing.
All right. Well, they're going to be having their conference call at 1 p.m. John, tell me specifically, what are you going to be listening for then?
Well, based on the quarterly report today, the U.S. same-store sale numbers were better than expected, and then Europe and Asia continue to be very strong and better than expected. So traffic remains strong, pricing remains solid, especially over cost inflation. And then McDonald's has been really active on the share repurchase and the dividend increasing cash flow program here for the last couple of years. So I would imagine the management team is going to be pretty confident and pretty bullish on their outlook that the trends in place, at least for the next 6 to 12 months, are, in certain degrees of magnitude, going to be able to sustain themselves.
But even with, as we just talked about in relation to what Costco has said this morning, that you think that they're still going to be able to state a more positive outlook?
Unless they're really, really bearish on the economy and they see a significant negative impact to their traffic patterns. But, based on what we've seen this year and even last year, it looks like traffic continues to sustain itself at McDonald's stores. And instead of people treating themselves to an expensive vacation or expensive clothes or jewelry,
they're going to go to McDonald's.
That seems to be the new treat for the consumer, given the employment concerns, the economic concerns, and the rapid inflationary environment that everyone's operating under.
All right, very quickly, John. Second quarter comp sales for the U.S. up 3.4%, well below the overall same-store sales for the company. How are they going to drive the U.S. sales?
Well, one is trade down. I mean, traffic continues to sustain itself. And two, when you look at the menu mix, McDonald's has effectively been introducing a lot of higher-end, more expensive premium products. So instead of competing on price and dollar menus and low-end products to try and drive traffic, what McDonald's has been trying to do is offer the increased traffic or trying to drive traffic through premium products and niche-y type products.
You see, that's what I don't get. You're talking about trading down because of their lower prices, and then now they're going into $4 coffees. I don't get that.
That's when you walk into a McDonald's, that's how you treat yourself. I mean, it's not really a treat to go to McDonald's for a cheeseburger and French fries. I mean, the treat is a premium salad. The treat is a premium sandwich. The treat is a premium shake or a premium coffee, but premium being a $2.50 or a $4 purchase instead of going to a restaurant and paying $12 for a steak or something like that.
All right, John, thank you very much for joining.